Hi everyone, in today's video we'll be talking about the Buy Now Pay Later app Affirm. We'll be looking into what Affirm is, how it works, applying to use it, benefits of using the app, managing payments, plus safety and security. Whether you're planning a big purchase or simply looking for a convenient and flexible way to pay for everyday items, Affirm is an excellent option. Buy Now Pay Later is a financing method that more Americans are using to make discretionary purchases, especially online. At least 39% of consumers have tried this option, also known as a point-of-sale installment loan, at least once, according to a 2021 survey by the Strawhecker Group. So, what is Affirm? Affirm is a financial service that allows you to pay for your purchases over time without any hidden fees or compounding interest. With Affirm, you can split your payments into smaller installments and pay over a period of time that suits you. This means you can enjoy your purchase now without having to worry about a large upfront cost. Every Buy Now Pay Later provider works a little differently, though the basic premise is the same. At the checkout point, under payment options, you are offered the option to spread out the payments for whatever you're purchasing. You apply and are usually approved in seconds for what's basically a short-term loan. You make a small down payment, then agree to pay off the rest of the installments over a few weeks or months. The way that Buy Now Pay Later programs like Affirm work, the merchant is not offering you this credit. Instead, a third-party lender that has partnered with the merchant is providing the credit. Affirm is one of these third-party lenders. Affirm is designed for financing purchases when shopping with partner merchants, though some platforms that offer short-term installment loans also offer bill payment services or money transfer services. Affirm isn't one of them. With some point-of-sale loans, your payments are automatically divided into 4 installments. Specifically, that means an initial down payment at the time of purchase, followed by 3 additional installments. Affirm, on the other hand, works by allowing you to choose your payment option. So, for example, you may be able to split purchases up into 3 payments, 6 payments, or 12 payments. Affirm doesn't state a minimum purchase size on its website for consumers. Instead, it's up to the merchants that partner with Affirm to set minimum purchase guidelines. Affirm's business website mentions a minimum of $50. Affirm's website also mentions a maximum purchase price of $17,500, but again, the actual amount you're able to finance with a point-of-sale installment loan from Affirm can vary based on the merchant. Affirm generally leaves it up to merchants to set minimum or maximum credit limits. Though there is an upper limit of $17,500 on purchases, your individual credit limit is determined by factors like your credit history, your payment history with Affirm, how long you've had an account with Affirm, and the interest rate offered by the merchant when you're applying. It is worth noting that you can be approved for more than one Affirm loan with more than one merchant at any time. So, how can we increase our credit limit? If you're initially approved for a loan with Affirm but wanted a higher credit limit, there are a couple of steps to take to try achieve this higher limit. First, you can pay off your current Affirm loan on schedule. Affirm looks at how you're managing existing loans when approving you for new Buy Now Pay Later arrangements. Next, you can work on boosting your credit score overall. Things like paying bills on time, reducing debt balances, and limiting how often you apply for new credit could work in your favour for getting a higher credit limit with Affirm or any other lender. So, does using Affirm hurt your credit score? Any time you apply for financing, it's important to consider how it may impact your credit history. There are 2 components to consider: the credit check and how your account activity is reported to the credit bureaus. Affirm does check your credit, but it's a soft pull rather than a hard pull. That means you can get pre-qualified for Affirm financing without impacting your credit, and there's no obligation to use Buy Now Pay Later financing until you actually make a purchase. Most Buy Now Pay Later services don't report to the credit bureaus. Affirm says it will not report a loan to the credit bureau, Experian, if the loan is 0% and 4 bi-weekly payments, or if you were only offered one option at the application of a 3-month payment term with 0%. It may report longer term or other loans. Okay, so what credit score do you need to use Affirm? Affirm doesn't specify what credit score you need to qualify. Qualification is based on your overall credit history, your history with Affirm, and current economic conditions. Generally, the better your credit, the easier it will be to get approved for a point-of-sale installment loan. Does Affirm charge interest? Affirm generally offers 0% interest financing, but there is a chance that you may have to pay a higher rate. Depending on your credit and eligibility, Your annual percentage rate, or APR, can end up being 0% or 10 to 30%. A down payment may also be required for some purchases. How do Affirm's interest rates compare to other credit card rates? The average credit card APR was 19.07% for credit card accounts as of November 2022, according to the Federal Reserve data. Affirm could thus be a less expensive option if you qualify for 0% financing, but if not, then it's possible that you could end up with high interest rates compared to what you might pay with a credit card. Affirm works with thousands of retailers and merchants, including stores in the apparel, travel, electronics, home and fitness categories. You can use Affirm to shop online or through the mobile app. Specifically, you can use Affirm to make purchases at partner store websites, through affirm.com, or inside the Affirm mobile app. You would simply shop for the items you want, then add them to your cart. When you're ready to pay, you can choose Affirm as your payment option at checkout. Affirm then allows you to choose your payment terms and complete the purchase. Okay, so how do we actually use Affirm in-store? You can do so with an Affirm virtual card. When you're approved for Buy Now Pay Later with Affirm, you can choose to have the amount loaded onto a virtual Visa card that works just like a credit card or debit card for making purchases. To use your card in-store, you can access it from the Affirm app or link it to Apple Pay or Google Pay. Now, how do returns work when using Affirm? If you have an issue with a purchase or need to return an item, Affirm advises customers to contact the merchant directly. You would then have to follow the store's policies for returns. In terms of what happens to your Affirm loan after making a return, there are a few possibilities. For instance, Affirm can cancel your loan completely if the merchant has finalised the return. If the amount returned to you is more than the loan, then Affirm can return this overpayment to you. But the result may be different if the merchant issues either a partial refund or a store credit in lieu of a refund. In that case, you would still be responsible for paying any remaining balance due on your Affirm loan, even if you've returned the item you've purchased. There are, however, several benefits for using Affirm. First and foremost, it allows you to spread the cost of your purchase over time, which can be very helpful if you're on a tight budget. Affirm also offers transparent pricing, so you'll always know exactly how much you'll need to pay and there are no hidden fees or charges. Managing your Affirm payment is hassle-free. Once you've made a purchase, you'll receive monthly statements detailing your payments and due dates. You can also manage your account through the Affirm mobile app or website, where you can set up the auto pay to ensure timely payments. Note there are no late fees, prepayment fees, service fees, or any hidden fees of any kind with Affirm. If you don't pay Affirm on time, they can report your account activity for instalment loans to Experian. If you do fall behind on payments or don't pay at all, that can show up on your Experian's credit report, ultimately hurting your credit score. You may also have trouble getting approved for new loans with Affirm in the future. Now, in terms of security, Affirm takes a number of steps to protect your personal data. This includes using encryption to secure data and conducting background checks for all employees. For your finances, there are some risks to consider. Though Affirm touts itself as an alternative to racking up debt, you still incur debt when you use this payment service. So in conclusion, Affirm is a great option for anyone looking for a flexible and convenient way to pay for their purchases. It's another buy now, pay later service that allows merchants to provide flexible payment plans for their customers without hidden fees or gimmicks. Consumers can pick the payment option that works for their budget, from 4 interest-free payments every 2 weeks to monthly instalments.